Ay, Sir Jonas, ikaw na mag-ano, no? Mag-share ng screen mo later.
Mhm. Okay. All right.
We'll start in a few minutes. Let's just wait for everybody to enter the room.
Kalsada at meron pong overlooking mountain. Welcome din po sa mga bago nating viewers at kung hindi pa po kayo nakaka-subscribe, makikisubo po sana na makikisubo at notification bell para kayo ay nasa tuloy mag-upload po mga bago. Uli, ito po si Jem, ang inyong tagapagdito na tagapagdakita ng magagandang travel. Ngayon mga kaparlan, dito ko po ito para makita nyo ang ganda ng cover. Unahin ko na po, meron yan ng kuryente Nakita ko po sa inyo kanina, poster po.
How old is your son? 6.
Nakita ko po sa inyo kanina, poster po, kaibigan, movie. Pero honest po tayo dito sa area na ito ay mahina signal po pagkakita. Pero wag po kayong mag-alala, meron naman po internet provider dito.
I request the IRs who joined today to please rename yourself by indicating which company you're connected.
Ay, tulad
Thank you.
sa kaya naman kung saan mang paano. Pwede po kayong magtayo sa tuktok ito ng inyong rest house, mga kapartner. O kaya naman gawin yung camping site, party, or pwede kayong magtayo ng maraming puno tulad ng durian, kalamdan, rambutan, kalamansi.
And reminder to the participants to stay on mute. We'll open the floor for Q&A later if you want your question heard live, or you can message either myself or Abby from the SharePHIL Secretariat with your question, or the speaker directly. Those who sent in questions via the registration form, we forwarded them to the speaker, so we'll go over them during Q&A. Thank you. Sir Jonas, whenever you're ready, please start your video.
I'm good. Okay, so
All right, I'll just do a quick introduction for you. Is that okay? Or game? No, we'll just dive right in.
oh,
Okay,
I'm
so
good.
yeah, thank you, Sir Jonas, for joining us today. We appreciate you giving your time as usual. And as everybody knows, Sir Jonas is our daily dose of market forecasts with his daily Ravelas perspective for the SharePHIL Viber group. If you're not part of the Viber group yet, please send us a message. We'll send you the join link, or we'll send it on the chat also as well. So just a quick intro. Sir Jonas is one of our longtime SharePHIL members. He is now the Managing Director for the e-management for business and marketing services. It's one of the country's leading, and he is one of the country's leading private analysts. He is a speaker in high demand and a commentator in the Philippine media for his vast knowledge of the country's economic landscape. His long career spans roles in various capacities in the financial industry. So without further ado, we have Mr. Jonathan, or Jonas Ravelas, here with us today. Thank you, Sir Jonas. So you have the floor.
Okay, let me just share my screen. Okay. Okay, so without further ado, I guess what has changed from start of the year. I think from an external perspective, from the narrative that we're seeing the US Fed probably nearing its end on its tightening cycle, it seems that from their terminal rate of 5%, they're starting to think of further extending that to probably between 5.5% to 6%. The second is geopolitical tensions remain as the Ukraine conflict continues. No? So I guess from a Philippine perspective is that, by the way, blue is negative, green is positive. So the Philippine the Philippine economic recovery continues despite this rising inflation. So I think this really highlights the resiliency of our economy, particularly consumption, despite that the issue is inflation. No? I guess if we really try to look at inflation, it seems that it's only a smaller portion of the economy that is complaining on inflation, while the majority are already used to the impact of higher prices. So whether they have 1 to 2 meals a day or 3 meals a day, they're able to adjust to probably 1 meal a day. So let's face it. Sad to say that inflation remains sticky and has yet to peak. But again, the growth will most likely suffer and the financials will take a hit from higher interest rates. So let's dig in. So when we look at the global economy, I guess the good news is that commodity prices have mellowed. I think, but this red line that you see here on the commodity side is just highlighting that there seems to be a strong support and highlights the inability of seeing commodity prices much lower, mainly because the Ukraine war is still here. But we also have to realize that one of the major components that drove oil prices down is the selling of strategic reserves. We can actually say that if China further reopens, most likely the other G7 countries will most likely start stockpiling their oil reserves again. So that could probably limit the impact for oil prices. So in terms of the US, I guess this shows a real big picture coming from a close to 9% inflation. The US now is really is way below at around 6%, and 6.4% to be exact. And eventually, it's still far off from the 2% long-term target. So that differential of more than 4%, there's still a real need to raise interest rates. And eventually, over a 50-year period of the US Fed fighting inflation, we've seen a series of events. So whether we talk about 1973 oil crisis, interest rates, which are represented in blue, eventually went higher than inflation. So similarly, in the 1980s, interest rates reached 20%, battling over 12% of inflation. During the 1997 Asian financial crisis, we've actually seen higher interest rates compared to inflation. So with the global financial crisis in 2008, with the exception of today, which we're coming from the COVID pandemic. So this actually argues that we could actually see the levels of closer to 6% of US interest rates. And the last time we've seen that was over 2007 to 2008. So looking at the potential aggressive hikes to eventually try to bring down inflation, we could actually see a 6 to 6.5% in terms of the US expectation between now and year end. Okay. So when we look at the Philippines, we are looking at the Philippines with the recovery continues. I think what I'd like everybody to pay attention is the orange bars that you see there. These are basically the household consumption. So you will notice that after the pandemic, we are actually seeing more stable and much higher growth even prior to pre-pandemic. This eventually highlights the impact of what we're seeing prior to the pandemic, that when the Philippine per capita GDP breaks the 3,000 mark, this is what people call the J curve. Well, I'll call it the Jonas curve. most likely showing that this could actually support the recovery that we're expecting, as ADB and other countries shows a very exponential growth of GDP in the coming years. Okay, and it seems that we're really reflecting this despite the high inflation. So if when we look at sustainable growth, this really actually gives the BSP to respond aggressively against inflation. Given the fact that we've recovered from a negative 9.5%, and eventually now we've grown to 7.6. So probably in 2023, we're looking at around 6.5, and probably recovering to around a baseline of around 2024 at 7. So again, one of the things that we've seen aiding inflation at the moment is really the recovery of unemployment. So job market has really recovered way beyond the pre-pandemic lows of 5.4. We're at around 4.3. The lowest was 4.2. So the fourth quarter really highlighted a lot of consumption-driven spending. So recent economic indicators continue to point economic reopenings are really supporting this recovery, with the PMI still at around 52. However, manufacturing capacity hasn't gone back to around 75. We're steady at 72, and we're seeing more business construction permits. So this is actually highlighting the recovery. And if we tend to look at the other signals in the economy, like remittances, bank lending, and vehicle sales, they continue to highlight that the recovery is on a more stable path. I guess it's only in trade that we're seeing a much lower importation. I guess this is more driven by the impact of inflation. So when we look at the business cycle backdrop based on the business and consumer surveys by the central bank, it only highlights that what is eventually depressing the survey is really all about inflation. So it's really all about how do we fight this inflation. So compared to the US, we're looking at a different picture. If we were to actually try to think of a song that will highlight inflation, it's up, up, and away. So this is something that probably we could peak at around 9 to 9.1% in February. So and probably flat when it comes to March. But again, that depends. So I think what is important to note that during the fourth quarter, we've seen a very stable movement of inflation, just as seen in this chart, is primarily driven by the slightly stable peso in the fourth quarter, as we've seen a very aggressive central bank. And the Philippines has already raised 400 basis points or 4%, and is the most aggressive among other central banks. And today, the BSP governor highlighted that they could further raise rates by 50 basis points if inflation is actually much higher than 9%. So again, this is a chart very similar to what I've done for the US, but this is eventually since 2000. So where interest rates reached 15%. And with the exception of the global financial crisis in 2018, the central bank has eventually allowed inflation to move higher by not really aggressively raising interest rates. But eventually, we saw prices coming down. It's only, I think what is a big difference today is that we're seeing a tightening or a policy normalization in the US, very similar to ours, that unlike in 2018 or 2008, the central bank or the BSP has allowed inflation to run its course and eventually go back. So then the idea was transitory. Okay. So eventually, trying to tame inflation highlights non-monetary invention remains very critical. However, this the strategies of government will not materialize sometime soon. It will take a while. Despite the fact that they've already done this since the early part of 2022, the safety nets for vulnerable sectors, subsidies. The good news is that despite all of these subsidies that they've done, we were able to narrow the budget deficit. So this is, I think, a good news. We probably turned a corner in trying to see widening deficits, but the key question is sustaining the narrowing of the deficit. So in terms of the inflation picture, I guess we're looking at probably seeing a topping out condition in the first quarter, and hopefully seeing an most likely the emerging view is seeing an inflation still elevated but closer to around 7.4 by year end. So this eventually assumes an exchange rate closer to around 58 to 59 that highlights this condition. So eventually inflation brings some universal truth. Inflation consumes cash. Price increases roll throughout the value chain, and this eventually affects consumers. So the third is really aggregate measures like CPI doesn't tell much of inflation, of how it will affect your company. So this is something that we need to be able to try to do and try to monitor. So the effects of inflation are cumulative. So this is something that you want to be able to look at on a company basis. I guess this is something when we start looking at survival. Okay, so inflation trends are partly psychological. I guess the good thing about inflation is just allowing prices to rise. Sooner or later, people will realize if they really need it, then they'll buy it. Otherwise, just avoid it. Okay, because sometimes the other way is that people will start hoarding goods. So this eventually can lead to hyperinflation. So this is something that raising interest rates try to avoid. It allows individuals to make a choice, to save, to invest, spend. Okay. The sixth is eventually inflation can eventually turn to a well-planned capital expenditure. Sometimes people will try to take this as an advantage, despite people are taking a sideways bet. Okay, I think the other thing is sometimes sacrificing consumer trust to protect the business from higher cost has long-term consequences, and that's the reason why consumer companies sometimes just have a pricing mechanism. So, of course, inflation reorders competition. So this is something that we want to be able to do, and hopefully people will become more competitive and rise through the challenge. So how do we fight inflation? So eventually creating a war room to pick up the early signs of and topping out. So it's not really just listening to the narratives that people tell you. It's really creating a group that will try to look at what will drive it and what will try to bring it down. Because listening and reading through the news will really allow you to just listen to a narrative that actually can change. Pay attention to cash if we tend to look at it from a financial perspective. Sometimes you have to change your price approach to be able to stay relevant, find cost cuts that build the business. I think this is something, if there is one word, this is the letter R. This is eventually you want to be able to say resiliency. Sometimes you have to renew your business model, and inflation's everybody's business. So in terms of interest rate, the race to policy normalization, the Philippines is leading. So most likely we are headed to the levels of 2007, where probably policy rates could go as high as 6.5 to 7. So I'm a bit more aggressive because one of the things that I pointed out earlier is that you have an unemployment rate that has gone down to 4.2%. Prior to all of this, since March, the impact of inflation was really driven by the supply side, or what people call the cost push. But because of the unemployment coming down, there seems to be this demand pull component. So the central bank must be able to eventually try to influence decision, and that could bring us to probably between 6.5 to a more aggressive 7.5, depending on how the BSP will act. And it seems that the statements of the governor today is really more of a hawkish. So that's something to look at. And when we look at the comparative yields between the 10-year US Treasuries and the Philippines, the differential are closer to around 2.5 to around 3% during the 2018 inflation that's seen here. So we're currently at around 2.4. So we could actually see the differential coming back and probably keeping the peso at bay. So if we tend to look at, and this is something that has happened since 2001, is that we've seen a major change in the interest rate landscape. So I believe that we're starting a new trend, more on the upside, which can, if this inflation condition will continue, could actually bring interest rates back to around 8 to 10%. So again, what will drive interest rates? Higher yields on global monetary tightening as they fight inflation. So when it comes to again, external buffer, so we were very lucky that we were able to build up our gross international reserve, which is now back over 100 billion, hitting a low around close to 90 billion. So the central bank was able to buy back or actually build under GIR. And eventually our import cover have improved slightly. So this is eventually the blue line that you see here. Our current account balance and oil prices have slightly improved. But again, once the economy goes back to normal, we will probably be expecting more of these deficits due to the higher prices. So when we look at the exchange rate, it seems that the uptrend in terms of the direction of the Philippine peso remains. And for those who have heard me talk about it, to me, this is a very similar situation, and I've actually labeled it as during the early part of 1997 to 2001. So you'll notice that the marks of Roman numerals 1 and 2. And we are eventually moving into a third wave path, meaning an uptrend that is higher than the first. And this can be evident in what we saw in 1997 all the way to 2001. So we are just beginning this new uptrend. So the key factor, I guess, really is the range I'm looking at for 2023 is probably between closer to what we saw of 58.50 to 59. So it's really more of filling this gap here. And probably in 2024, we could actually see the peso closer to 60 by then. So again, what could drive the peso weaker is really the inflationary pressures plus the widening deficit, the current account deficit. So in terms of the outlook, I am more looking at between 57.50 as a baseline and around 58.50 for my emerging view based on the present movements today. So in terms of earnings backdrop, we're actually seeing that despite the fact that expectations, corporate profits are likely to be pressured, earnings expectations have been very aggressive and is quite close to pre-pandemic levels. Okay, so the key question really is, are these earnings recurring or non-recurring? So the impact of inflation is something to be looked at of what could eventually trigger uh, the valuations in the market. So in terms of my wave count and my view, nothing has changed from 2018. We are in a downtrend, and the long-term implications continue to highlight that prices will be pressured. The risk lies closer to around 5.7. Again, until inflation really is trampled, then the prices of the equity markets will eventually be limited. No? There will be limited upside. And this level here is actually what I call the COVID resistance. So that's around 7.5. So for the market to indeed turn bullish is you need to break beyond 7.5. So in terms of my outlook, I've highlighted the good, the bad, the ugly. So for 2023, I'm looking at 675 as a good GDP number. At worst would be 5.5. So I think what has changed really is the outlook for inflation from an expectation of a 4.5. This was very well reflected in the January inflation forecast that I have that was below 8 at around 7.9. But eventually, given the 8.7 highlights a new adjustment of around 7.6. And I'm more on the view that BSP will most likely raise rates way beyond 6.5%. We're currently there, so most likely the adjustment that was shown earlier was pointing to around 7 to around 7.5. Okay, so for the exchange rate, at best, we're looking at 56.50. The emerging view is, instead of a 57.50, we're looking at 58. A worst case could be around 61. So at present, the stock market is at around 6.6 level. So the base view was really looking at 7.850. The best view, I think, has already materialized. We hit a high of around 7.1. So the question is, are we headed for 5.7? So what are the risks and challenges that we have? So I think when we really look at the cause of concern, you have this. It's really all about same things that we encountered last year: inflation, demand volatility, supply disruptions, geopolitical tensions, and I have to add not just the Ukraine war, but something closer to home. So eventually, the Philippines has already taken a position supporting U.S. and its allies. So again, recently we've seen 10 incursions by the Chinese in our borders. So this could also increase the geopolitical tensions. Again, issues of sustainability and climate hazards, which talks about ESG, environment, social, and governance. Sad to say, what is really more important today, especially for local companies, is really creating resiliency. Most of our what we need are all imported. So probably we might want to start thinking of trying to source locally. And of course, these issues of reverse globalization and wars. So of course, balancing the view is really looking at this administration 8-point socio-economic agenda, talking about food security, improved transportation. Again, these are very similar to the previous administration, but I think two of the most important things that they've highlighted is food and improved transportation. And of course, affordable and clean energy, which are very much needed should we eventually shift moving into the manufacturing space. So what's the cause for optimism? We've seen the passage of the 2023 budget, fiscal consolidation, the demographics. We have ample buffers to support the favorable economic environment. The recently Philippine Development Plan. I think one of the things that I'd like to highlight that I'm working with the DTI is really the e-commerce roadmap. This is something that will actually try to balance the situation for SMEs. They need to be able to adapt to the digital space to be able to remain competitive and eventually reach out. So the other thing, of course, is the build more, which will improve infrastructure. So two of the most important things, transport and logistics, are very important business for the Philippines, especially for us that were very consumer-based. And lastly, of course, we have a very strong credit rating. So the build more eventually aims to reduce transport and logistic costs. So the government has allocated around 976 billion. There are actually a lot of other projects, but I'd like to zero in on just three. The Public Utility Vehicle Modernization Program. I guess when you look at the vehicle sales, that is how consumers and fellow Filipinos address the problem of commuting. If they're finding it hard to ride the MRT, the only thing that they need to do is buy a car. But these three are very important as the service contracting program and low carbon urban transport systems will eventually improve the commuters, especially the use of P2P buses, and eventually the use of good terminals for provincial travel. So this will actually create a lot of activity. And hopefully, when people start experiencing this, they'll use less of their cars. So this, I think, is very important to be able to, again, ramp up activity in the economy. So eventually, let me end this as how do we ride the next wave of disruption? It's really appreciating our resources. Keyword is SRP. First is survive, especially in these challenging times. I've highlighted the impact of inflation. Second is really how do we pivot to the new abnormal? I think abnormal or uncertainty is the new normal. So we need to be able to prepare for them. And the third is really how do we repurpose assets or people in this type of environment. So know the risks ahead. I think I had the slide that just highlighted. And I think two of the most important things is inflation and geopolitical tensions. From a investor perspective, we have to keep on investing. Look for bargains. I prefer buying stocks rather than buy funds because you don't know the threshold of individuals, especially for funds. When people start fearing that prices could still fall, you have no control when you're in funds. So you're better off holding stocks. Of course, as government tries to improve on its budget deficit, we need to be able to pay the right taxes. So again, we need to spend more, but wisely. And our most important tool, pray harder. So this is my last slide. And again, just highlighting the scenario for 2023. Okay. Thank you.
Thank you, Sir
Anna,
Jonas.
Okay.
Okay, I'll keep you pinned on the screen for the Q&A. So I've sent you some of the questions from our registrants.
Yeah, I'm.
So okay. So can you give your outlook on some of some of the industries locally? In particular, there was a question on your outlook on the property sector.
Well, I think the property sector, if we tend to look at 5-10 years from now, it's still going to be driven by food, retail, property, and construction. So I guess in terms of a medium-term view, property will still be the biggest winner because of all of this infrastructure spending of government will eventually highlight the property sector. We don't need to talk about before. Property is all about location, location, location. Today, it's all about connectivity. Okay, thanks to Starlink, and we're able to see the impact that as long as you have connectivity, a lot of things can do well for your property. Whether you're driven by a call center, your business, and we've seen this before with the proliferation of fintech apps like Grab, Waze, people are able to go to certain places. So property will always be the winner over a 5-10 year period. It's also a good hedge against inflation. So again, one of the key things aside from location now is connectivity. So especially now with the support of government for BPOs that they can work from home, telco companies like Dito offers 5G, are able to, at a cheaper price, people are able to use that for work in certain areas. So again, location now is boosted by connectivity. So I think that those are very good signs aside from infra spending that will support the sector. So probably if we look at the high end, that will be flat. But over a 1 to 2 year period, especially those that are moving from Quezon City going to Pampanga, once we get to see more transportation access, prices will slowly rise in those areas.
On a related note, no, what's your outlook naman on the construction industry, parang as an input to the property sector?
Well, it's really a challenge, but again, mainly because of the higher prices, it's really about trying to collaborate. Recently, one of the companies that I advise, we were talking about collaborating with suppliers to be able to, try to make lower cost of construction. So you might want to be able to, add the word, your cables are done by, or pipes are made by another company. So it could be a bragging right, and that can give you lower cost. A good example that's coming to the Philippines is a UAE brand that's called Rack. It's supposedly a good for finishing of houses and toilet equipment. So it's comparable to the Japanese Toto brand.
I see. And what's your projections for the energy industry this year?
Well, I guess everybody is trying to focus on looking at alternate energy. I think what we need to be able to do, that is actually good as a medium to long-term investment. But the key factor really is how are we able to address the power situation. So government needs to either sell all of our power plants to somebody who will refurbish so that we're able to really prepare if there will be a shift to manufacturing, which we need. And again, the shift to manufacturing doesn't necessarily mean we want them to go to the PEZA zone. It's nice probably for those that are really going to import, but as consumers, we want to be able to attract companies outside the PEZA zone so that we can take advantage of the lower prices because it's manufactured outside the PEZA zone. Unlike in the PEZA, 70% is exported and around 30% is only sold locally. So it doesn't really benefit much, not just employment, but again, if we do it outside the PEZA zone, it affects us consumers. So that actually benefits us. And again, they're tapping a market whose average age are 26 and a half. So we know that when you are between 20 and 60, your income's exponential. So that's actually driving potential sales, especially for those that are in the 26.5 years. There are a lot of wants, diba? There are a lot of YOLO moments, so they want to be able to purchase. Unlike those that are over 60, they're mostly spending for health and technology, diba?
Great. Any other industries you have specific insights to? Maybe how about mining or any other
I think for the mining sector, I think I'm waiting for government to give more clarity on the mining sector. It's something that we can actually have aside from tourism, your OFW remittances, and the BPOs. And despite the fact that we're really seeing very good impact on remittances that are around close to 32 billion, we're also seeing the impact of the BPO sector. And I'm betting more that we could actually grow more the BPO sector so that the social capital will actually become much lower. So that, I believe, in probably 2-3 years time, the BPO could actually overtake OFW remittances. And that will have a great impact for the Philippines.
Thanks. Okay, so there's also a lot of talk on food sustainability and food security. So what's your outlook in the agri sector naman?
Okay. Well, I was in one forum with people from Ateneo to eventually highlight the story of food security. And, the government plans are all good, which the president highlighted in the State of the Nation address. And I remember we did an economic briefing then, and I said it's all hands on deck. The problem is the food security has a lot of bells and whistles that needs to be fixed. One is we need to be able to improve irrigation. In the 50s, the 60s, the 70s, there were a lot of support coming from rural banks that supported the farmers. Then, today we have 500 rural banks, of which only 100 are strong. We need to be able to improve on supporting the rural banks so that the food security will eventually stand on its own. Otherwise, it would be difficult, so that they'll have the scale. I can only think of one bank who's able to probably address these issues. Of course, you have the government, land bank, and DBP, but again, you want to be able to be closer to the ground. They know everybody so that they can eventually create the ecosystem. So, sad to say, it's just that it will take a while to be able to do food security and to see its fruits. Because yes, I've highlighted in the slides that we want to be able to do hog production, improve fisheries, but it will take a lot of education to the farmers, and we need the private sector to help to be able to do this. Again, when we think about this omelette crisis, because it includes now the egg. During the pandemic, people were able to buy egg, and onion without leaving the house. Everything was done digitally through GCash. Farm to table was basically much shorter. No one's doing that now. The problem is we need to be able to help support these small communities so that they are able to become more productive. So very few companies, and this is what I do, is we try to band a group of farmers just to keep them less than 30 and educate them from doing farming activities, support on fertilizer, and we do financial literacy, and we link them to microfinance companies so that we're able to create an ecosystem that will eventually help them go through the whole process from planting all the way to selling their products and making it a business for their family. So we encourage their children to study digitalization, use the TikTok as an opportunity to sell their products. Their family produce and they get 10%. So the plans of government are good, but it will take time. So the challenge really is how do we, the only solution that we're already doing is really a set of importation. Last year, we imported 14 trillion tons of food just to be able to mitigate inflation. It's very difficult to plan for a whole country when it comes to how much onions to import. So, and eventually how much feeds do we need to import or rice. So this is a challenge. Plus, we don't have post-harvest facilities such as silos or the creation of cold storage so that we're able to store what we import so that we're able to preserve them. So we need to be able to create small industries that will try to do this so that we have an ecosystem that will do it.
Thank you. That was great. I think we have another question in the chat from Jeffrey Lucero. Happy to hear your bullishness on the BPO sector, but how do you think AI like ChatGPT could impact the BPO sector's growth? What needs to be done to avoid BPO jobs getting taken over by AI?
I think one of the things that's really important when it comes to the BPO is really understanding the job at hand. I know I have 2 children who are in the call center business space, and trying to understand their job really requires not just AI, because sometimes all you need to do is there is empathy, and you just have EQ to actually try to have patience talking to the client. If we're all going to go AI, then it's going to be different. Nothing's going to happen. People will just slam the phones, especially when it comes to addressing people's credit cards, trying to call a call center of a bank, trying to help them change their passwords, access their statements. All of these things, you really need to talk to somebody, even though it can be done by AI. But when you try to listen to their conversation, sometimes the only thing that you will hear, once there's empathy, they get to hook the client. So you have to have the right choice of words. Yes, you can actually try doing that on ChatGPT, but sometimes the intonation of voice is different. You can hear it. You can feel the sincerity of the person when you're on a conversation. So it's short of saying you can't fax a handshake. You can't look at the client straight on the eye. It's different. So I think Filipinos have this unique perspective of and insights of doing these things.
Yeah, there really is a value in the human connection. So that's something that AI probably can never replace. Hopefully, it's very scary if AI develops to that level. I think we have a few more questions from our registrants. This one's very interesting. Somebody asked, given the current macroeconomic conditions and market valuations, which would be a better capital source? Just you can generalize your answer. It doesn't have to be company or industry specific. Do you think it would be better to raise capital via debt or equity instruments?
Oh, well, I think at this point in time, there's always a challenge to go to the equity market. Although, again, unless you have a compelling story to tell, this could be a good opportune time to actually convince people to take advantage of the situation. I remember during the 70s and 80s, story from my parents, and one of the things was to expand PLDTs. At that time, they called it the zero backlog. And of course, for people to have a line, PLDT created preferreds that you pay 100 just to have a line, just to ensure that there is a real need to do these things. And people, despite that it's required, people will most likely invest. Now, unless you have a very good compelling story like energy, you might want to go for an IPO. You'll have a compelling story to tell. On the other hand, given the present situation, there are a few things that sometimes you can just borrow on a short term, 1-2 years, to get you by, and at the same time prepare yourself for an IPO. So you can do a lot of combinations. There's a lot of liquidity that's there, and there are a lot of hands that are able to help you along the way. Because one is that we know that we are at the point where we're the momentum slowly coming back. It's just that, again, my outlook is just highlighting the reality that there are headwinds. And right now, the data that we're talking about really highlights that the Philippine economy is resilient in terms of its growth. But that growth can eventually slow down unless we really, take inflation, and eventually we invest in infrastructure spending so that we will not be left behind by our peers.
Thank you. I think we have time for maybe 1 or 2 more questions. Is there anybody in the room who has a pressing economic question right now? So I see one raised hand. Mr. Dino Bate has a question. Yes, sir, you may unmute yourself.
Okay, hi Jonas, good afternoon, and thank you again for gracing this occasion with your insights. My question to you is this: now, with the recent move of the BSP to raise rates by 50 basis points, and probably another 50 in the next meeting, do you think that the priority of the BSP has shifted from trying to keep the peso stable instead of trying to be more growth oriented, as what they did in the beginning when last year? So it's more the peso they're looking at now rather than keeping the economy growing.
Well, eventually, sad to say, for a while, I really thought the same way. The problem is, as I said, our inflation, in my view, is two-pronged. With unemployment coming down, we're now at 4.3%. Our lowest was 4.2%. There seems to be that, remember, pre-pandemic, we were at, or during the pandemic, we were around, pre-pandemic, we were 5.3%. So we went to as much as 17, and now we're at 4.3. So there seems to be an additional demand coming from consumers. Remember that they're over close to 2 trillion pesos that were placed in the hands of the public when the central bank, through its monetary policy and the government's fiscal policy of the bayanihan, there's 2 trillion worth of money in the hands of the public. So they need to slowly siphon that out. So they need to be able to allow, and raising interest rates allows people to think whether to invest, save, or spend. It's not just a tool of the central bank on price inflation, because they need to be able to raise interest rates. Otherwise, they also have to think of the Fed raising interest rates. So in the past, we've seen in one of my slides, in 2008 and in 2018, the central bank allowed inflation to rise above the target and not necessarily raising rates. It's just that this time you're contending with a Fed that is also raising rates. There's global tightening. So you need to be able to also protect. Remember pre-pandemic, the differential between the US and Philippine interest rates were around 200 basis points. We're at around 100. And when we left it, we saw the peso depreciating. Of course, that is partly the effect if we start raising rates. It also tries to bring down or it keeps the peso at bay. But it also has inflationary effects if we allow the peso to depreciate. So they're actually doing three things. One, keeping their focus on the price stability, which is the first pillar of the BSP. Second, they want to ensure that they're in check in trying to give people to try to not fuel inflation by raising interest rates. And again, the impact to consumers is whether to save, spend, or consume. So I think they're in the right perspective, and the BSP governor statement today I think is very critical in saying that he's really committed to bring down inflation.
Okay, thank you.
Okay, thank you, Sir Jonas. Anybody else have any burning questions for our speaker today? Okay, one last, Sir Jonas. What's your projected USD exchange rate in 6 months, or let's say by the fourth quarter? What's your
I'm looking
bold
at around
prediction?
my bold prediction is around 58.50 by year end. So again, this is based on the present. Yes. Kaya babagsak muna bago babangon muli. So that's the other BBM.
So do you think we should buy our dollars now while it's still at 54, 55?
Yes. I think, if you tend to look at no matter how much banks give you interest rates today, if you put your money in a savings account, you'll only probably you're lucky if you get a 0.625 per annum rate. But if you buy dollars today, compute the amount if the peso moves 30 centavos. So look at the interest rate when you look at it over a 1 year period. You're actually going to see high returns by just buying dollars. And it's the reason why most of the banks are actually recommending to shift to buying dollar funds, because there is an added FX component.
It's a very interesting rule of thumb. Thank you for that. So thank you so much for your time today. If we have other questions, I'm sure we can ping you with your daily Ravelas updates on the channel.
Okay, thank you.
So for everybody in the room, we'll have a short induction for the IR officers who recently joined as associate members. May we request those participants to turn on their cameras. And Abby, can you share screen with the with the oath. Okay, I'll do the share screen. Ayan, okay na. So these people, most of these people have signed up actually to be part of our technical working group to establish the IR circle, or our association of investor relations professionals. We'll actually discuss what our official name will be later today. So we have Mr. Alex Pomento of SM Prime Holdings, Ms. Bianca Del Rosario of FINMA, Ms. Caroline Cabigting of Alliance Global Group, Ms. Christine Gonzaga of Megawide Construction, Ms. Hannah Chan of DMCI Holdings, Mr. Jeffrey Lucero of DM1 Sislao, Ms. Joan Cosico of Megawide Construction, Mr. Leo Venezuela of Udena Corp, Mr. Luis De Jesus of AC Energy, Ms. Melissa Ortiz of Philinvest Land, Mr. Michael Blaze Aquilizan of Ayala Land, Ms. Patricia Pineda of Philinvest Street, and Ms. Christine Garcia of San Miguel Food and Beverage. So may we have these people turn on your video. I believe Abby has sent you a copy of the oath of membership, but we'll flash it on screen as well. I will pin Mr. Jimmy, Sir Jimmy Ismail I've made him co-host, but I'll pin him also to lead the oath of membership for our new associates. Thank you, Sir Jimmy.
Okay, thank you. Well, good evening, everyone. It's so nice and refreshing to see a lot of you, former colleagues, and also co-IR professionals decades ago for me, a decade ago. But it's so refreshing, and thank you for heeding our call to join SharePHIL, which I'm sure will actually enhance your practice of the IR profession, as we also launch an IR dedicated program, for all of you, and we're glad to be of service to you. So today we'll induct those who have already signified their membership, and to those who have not yet members, we look forward to your joining us soon. So please raise your right hand and repeat after me. I state your name.
I, Gina Depaling.
Please open your mics so that I can hear if you're. Do you hear me? Okay. Do solemnly swear to abide by and uphold.
Solemnly swear to abide by and uphold
Its articles of
incorporation
and bylaws.
and bylaws.
To commit and put into practice.
To commit and put into practice
Its core values and noble tenets.
its core values and noble tenets
Of fairness, accountability, independence, transparency, and honor.
of fairness, accountability, independence, transparency, and honor.
I pledge to help promote.
I pledge to help promote
Awareness of shareholder rights.
awareness of shareholder rights
Through responsible advocacy.
through responsible advocacy
And shareholder education.
and shareholder education.
And in so doing. Contribute to the building of investor confidence.
Contribute to the building of investors' confidence.
And contribute to the development of the capital markets.
And contribute to the development of the capital markets.
This I pledge without mental reservation or purpose of evasion.
This I pledge without mental reservation or purpose of evasion.
So help me God.
So help me God.
Congratulations, everyone, and welcome to SharePHIL.
Thank you.
Thank you, Sir Jimmy.
Thank you.
Thank you.
Everyone.
Thank you.
Thank you, Boss Jimmy.
This is a very active
Congratulations,
committee,
welcome.
the Capital Markets Committee, working with the IR Circle. So we're happy to have everybody on board. To all the IR officers, please stay online. We'll continue with our virtual meetup, monthly meetup. We'll just give
Yes.
updates on our projects. Syempre, the trustees who are also on the call, you feel free to stay online as well.
Thanks, everyone.
Thank you,
Thank
sir.
you.
So to the IRs, when you signed up for this event, we actually had a bonus question for naming the org, right? I will now launch the poll since we're a democracy. This is all the entries. We didn't shortlist anyone na. So we'll just give a prize to the winning entry. Please, we'll give the next 5 minutes for everyone to respond. We just request that the SharePHIL members who are not part of the committee be dial off. So okay, 9 of 18 have voted. Vote pa, please. Miss Valerie, good to see you here. So we have one of our longtime members from First Gen, Miss Valerie Dison Lim. She hasn't been able to join us in person yet for the IR meetups, but we're glad to have you here. We'll have more virtual meetups for more flexibility for our members also.
Hi, thank you.
Okay, leading for now is Philippine Association of Investor Relations, or PAIR for short. So, ayan, vote pa po tayo. We still have 2 minutes and 10 seconds for a 5-minute voting window. Okay, last 40 seconds, everyone. Ten seconds. I'll close this, or unless somebody asks for a grace period. Okay. Last call. Has everybody voted? We have 14 of 14 participated. Okay na. So I'll end the poll. All right. With one vote, we have IRAP, Investor Relations Association of the Philippines. Next, we have IROG, Investor Relations Officers Group. Our motto is, our favorite holding period is forever. And then we have 4 votes for Aspire, Association of Philippine Investor Relations Experts. And with 5 votes, we have, and our winner for today is Philippine Association of Investor Relations, or PAIR. So it rolls off the tongue easy for the shortcut. So that's our working org name for now. We'll submit it to the subcommittee on IR Circle org formation. So may I call on Miss Melissa Ortiz, Miss Dang? I've made you co-host also to preside over to this meetup, virtual meetup. I think you're still on mute.
Actually, no, pero kasi my earphones are not working sometimes. Anyway, thank you to SharePHIL and Anna